Topic A tonight, Ben Bernanke's first news conference, which led to a near 100-point rally in the Dow and a 10-year high in the NASDAQ. It looks like the easy money risk-on trade followed Chairman Bernanke. The Fed had failed to defend the dollar, which plunged again. Gold soared $24 to close at $1,526. Silver shot up 5.5% to $48. We're going to have a full report on Bernanke's big day and what it all means for the market and the economy with our all-star panels of experts. Meanwhile, oil hit $113, and tonight we're going to explore whether the Saudis are playing fast and loose with the truth about their oil production. And there's new management down in Washington at the Defense Department and the CIA. We'll dissect the new players and their impact on defense stocks. But first up, Fed head Ben Bernanke. And let us go to CNBC's Steve Leisman, who was there this afternoon in the room with Mr. Bernanke and spoke with the Fed chief during his first ever press conference. Steve Leisman, welcome. And you asked a great question. Thank you for that.
My pleasure, Larry. Just doing my job. And the Fed chairman doing his, using the first regularly scheduled news conference to explain the Open Market Committee's decision just moments earlier to stand pat on its policies. What's that policy? Ending QE2 in June, but continuing to maintain the size of the balance sheet at $2.8 trillion when it gets there for at least some unknown period of time. We couldn't get that out of him. Here are some of the takeaways. Bernanke giving us a little curtain raiser on the Q1 GDP report tomorrow, saying there is going to be weakness, but he considers it to be mostly temporary. The end of the extended period, well, that's always going to be at least a couple meetings away. That's what extended period means. Ending that reinvestment strategy I was just talking about, that he would consider to be a tightening. And finally, as Larry said, he wasn't overly concerned on the dollar, saying the best thing for the Fed to do right now would be to fix the economy and the dollar will follow. The Fed chairman said he believed the spike in oil and food prices was also temporary, but said the Fed would act if he's wrong.
Ultimately, if inflation persists or if inflation expectations begin to move, then there's no substitute for action. We would have to respond. I think while it is very, very important for us to try to help the economy create jobs and to support the recovery, I think every central banker understands that keeping inflation low and stable is absolutely essential to a successful economy, and we will do what's necessary to ensure that that happens.
The Fed chairman also all but sunk any possibility of QE3, saying the costs of inflation probably outweighed the benefits of any decline in unemployment the Fed could achieve. The trade-offs worked against it, Larry.
All right, Steve, hang with us, please. We're going to come back in just a minute. Thank you for your update, and I've got some good questions for you. By the way, let's get reaction. I want to do stocks and Bernanke. We have Lee Munson, Chief Investment Officer at Portfolio. We have CNBC contributor Don Luskin of Trend Macro. We have Jim LeCamp, Portfolio Manager at Macro Portfolio Investors. Lee Munson, begin with you. Today's stock market action was roaring. It looked to me like an easy money, cheap dollar risk on trade. And what I want to ask you is, after Fed's Bernanke's press conference, is that the deal? Is the stock market just going to spiral sky high now that we know money is going to be loose and the dollar is going to fall?
You know, the one thing that made me most angry, Larry, is that not much happened. I mean, if that was really the case, we should have seen a reaction in the Treasury markets. Apparently, that's what the case is. I was completely unimpressed, Larry, with what the Bernanke said today. It was like he was doing some Bozo party line in front of Stalin, just saying, this is what we've always done and this is what we're going to. The thing that bothered me most is that while he said he's talking about inflation, the market acted if he's not concerned at all about headline inflation. I think clearly the stock market is going to go up. I think this is a bunch of BS, and I think it's going to hurt the U.S. economy. I think that we're going to see a correction, and the lack of volatility today in the marketplace, the extreme complacency bothers me. People think that the dollar is just going to creep down forever, the gold is simply going to go up parabolically, and the stocks are going to be fine. I would urge people to use a little bit more caution just because Bernanke said everything's going to be great today. I thought traders were insane today. I was very upset.
All right, Jim LeCamp, let me ask you now. Is the dollar going to keep declining? Is gold going to keep rising? And are stocks going to keep rising along with gold on the easy money risk-on trade?
The highest correlation that we've seen, Larry, with easy money is in the commodities, particularly gold and silver, and in inflation themes and a weak dollar. All of these things confirm the move that Bernanke is continuing to be in complete denial about the direction of the dollar and his culpability in the direction of the dollar. I mean, these markets exploded today. The dollar got hammered, gold and silver exploded, and the stocks that did the best were our exporters. That's where all the correlations have been. And yeah, the party's going to go on for a while. I agree with Lee that it's going to have a bad end, but for now, he's just going to pump money into the market and be in denial about inflation. He says it's transitory. He's been saying it's transitory for 6 months. In the meantime, he's raising his forecast. I mean, what are we to believe with this guy?
All right, Don Luskin, what are we to believe with this guy? How do you play that in the stock market? And is it the inflation stock sectors that are going to do the best, including gold and silver and industrials and commodities and pro-growth cyclical retailers? Don, how do you see this?
Let's see. Now, what did you leave out? But you know,
defensive stocks. I left out defensive stocks because apparently the market today, I don't know if the market's always right, but the market today basically is doing the easy money risk on trade. It's not doing the Fed restraint trade, even though Bernanke ruled out QE3 and said in a couple of months they may take the extended language for the zero funds rate out. I mean, I thought he made a little shift in policy, but the market action didn't agree with me.
Well, I think you need to figure out a way to resolve that contradiction, because I think the narrative is not holding together here. Bernanke said very plainly that there's not going to be QE3. And the idea that there would be QE3 and QE4 and QE5 and QEN has been part of the hyperinflationary gold parabolic bear narrative that we've just heard over and over and over. Bernanke completely shut that down. So can we please give him some credit for that? That's not him being fast and loose with the dollar. That's not him being a bozo.
That's not what gold prices said today. Gold prices.
Well, okay, right. No, wait a second. Wait a second. But that maybe that. Wait a hang on. Hang on. You've had your chance, guys. You've had your chance. My turn. Excuse me. Hello. Stop.
Go ahead, Don. Please finish. You were on a roll there.
There are other things going on here. You guys are coming at this with the prior that if stocks go up, well, there must be something wrong with that. It just must be inflation. Folks, stocks are going up because we are in a global recovery, which is due in large part to the courageous action of Ben Bernanke of stepping in and reliquefying the economy. One thing you've got to understand when you're also worried about the dollar, let me remind you that the dollar was lower than it is today on a trade-weighted basis in early 2008 before the wheels came off and the banking crisis set. This is what Ben Bernanke said. He said that the big rally in the dollar that we've now given back was a safe haven trade. And because the world is recovering, the dollar is now simply returning to the weakness that it had 3 years ago. Don't blame Bernanke. Thank him. Your narrative isn't holding together.
Let me go to Lee. Lee, look, I have been touting the surprising strength in earnings. I think it's a great sign, and I think that's the best way for stocks to go up. Earnings are the mother's milk of stocks. But when I saw the dollar plunge again today and the gold price roar after Bernanke, actually during his press conference, it troubled me, Lee. That's all I'm saying. I was troubled by that action. Now, let me ask you, for investors, how are you suggesting that they play this?
I'm baffled that people, for all the free money that we have, still want to be negative about banks. I'm baffled that people, for noticing that Bernanke is finally talking about inflation, finally saying there will be no QE3, that we're still just going to go head into all the commodity and all the energy stocks. I do like copper because it's the cheapest out of this herd, crowd, lemmings group. So I'm long some copper.
Hang on, we got
when it comes to
Steve
the gold
Leisman.
thing.
Hold on 1 second, Lee. Steve Leisman wants to weigh in. I'm always happy to have my friend Steve Leisman weigh in. Steve, what are you thinking?
I'm sorry, I was just listening to this guy, Lee Munson, talking, comparing Bernanke to Bozo and Stalin. To me, was a little bit over the line there, Larry. I just wanted to point that out, and I think that he's really contradicted himself in a really interesting way. He's pointing out that Bernanke was first talking about inflation now, so I'm a little bit confused as to where he is and a little bit concerned about his rhetoric, Larry.
Lee, what's your response?
He's denying he caused inflation.
Steve, I can explain that, Steve.
And it's completely detached. He's saying that, oil prices are up and that's a troubling thing, that housing prices are down. He's admitting that we have some inflationary issues, that he's watching inflation. So traders aren't concerned that now he's watching it. Everybody's been harping on Bernanke for a long time because they feel that he hasn't represented the headline inflation in food and fuel that the masses have been clamoring for.
But
they want him to admit that it's been higher.
But I want to ask Jim LeCamp.
Finally, he says something like that, and the markets don't react.
All right, Jim LeCamp, though, I want to ask you: is
the market's stupid, and everybody, and you're brilliant. I mean, that's it's amazing. Larry was at least struggling with this idea of why does the market go this way when it knows all the things that you know.
Well, I was just impressed, and we're going to do our Fed watching in a minute. I was impressed by the fact that QE2 is coming to an orderly end, and he closed the door on QE3. And he did say, for the first time, I believe I've heard Bernanke say, that the extended period language for the zero interest rate target, the Fed funds rate, could last a couple more meetings. I felt, and Jim LeCamp, tell me if you think I'm wrong, because this has a lot of stock market implications. I felt that Bernanke's presentation today, even though I'm critical of him on failure to defend the dollar, nonetheless, he was less easy, not tight, but less easy today by slamming the door shut on Q3 and by saying the extended period of the zero interest rate only had a couple of more meetings, Jim. Is that significant, or am I just barking up the wrong tree, which Lord knows I do occasionally?
Well, the problem is his forecasting record is abysmal. I mean, he keeps changing. If you read every speech he gives, he uses words like unforeseen and unanticipated. They're always changing their forecasts. And here's the problem with what he was saying about inflation. He's denying that his policies have exaggerated the prices of food and fuel. Now, every trader in the world knows if you have negative real rates of return, food and fuel prices, the commodity trade is on. And these things have moved more so than the weakness in the dollar because traders are rushing into this trade because of Bernanke's policy. So the problem is he's losing credibility every day. Will he stop with...
But are you investing? Tell me where are you making the inflation investment trade?
Absolutely. We've been in exporters this whole time.
Right.
We've been in gold and silver for about 3 years. They're still our heaviest positions. They're very volatile. I wouldn't buy them right here, but they're very heavy in our portfolio.
All right, Don Luskin, I'm going to give you a quick last word, my friend. I wouldn't have thought gold would have skyrocketed today, Don. Tell me about that aspect of your investment strategy.
The only thing I can see in Bernanke's speech that was the least bit of a cue for that was when he said that when QE2 is completed in June, they were going to continue to not only maintain the size of the balance sheet, but to reinvest the MBS cash flows, which means that the natural attrition of the balance sheet won't be allowed to take place. That was the only dovish thing he said. So I tell you, it makes me think that gold's a little toppy here, Larry.
That's where I was going to go. You think gold's a little toppy? Very good. That's
I think
a great
it is.
point. All right, Lee Munson, Don Luskin, and Jim LeCamp. Gentlemen, thank you.